So you just hit like broadcast and then...
Yeah, I'm on YouTube right now. Broadcast, then I click what was this button, which was unhighlighted, and then it brings up a bunch of information, and whatever, I click the right information, which I can't show to you right now because I'm already on, and then it immediately goes into the system. All right, 12 o'clock, I'm about to get started here in just a few moments. All right. All right. All right, let's do it. This is your Prop Trader Market Update, hosted by yours truly, Derrick Oldensmith. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. Let me make my picture here a little bit smaller just so that we can see the disclosure. Cool, let me repeat that. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Bam, make it a little bigger again. Position disclosure here. Yeah, still net along the market. I mean, look where the SPYs and Qs are, but there's definitely some things under the surface here that got me a little bit concerned and have me pulling back on some risk. If you've been following along regularly, you might notice I'm actually out of a couple long positions here. I might be adding to that soon. So let's jump in. and talk about it. All right. I think everybody knows me by now. I've been with T3 for over a decade, so let's just jump right into the actual charts here in the trading before we talk about getting involved with T3. All right, so yesterday was once again an all-time high close for the S&P. It was almost an all-time high close for the NASDAQ, just kind of shy of it. And the Dow, which I don't really look at too much, all-time high close for the Dow. IWM, not so good. IWM started breaking down. Breadth has been really poor. There's some seasonality effects here in August that I don't like as well. And if the Qs start getting below yesterday's low, that's a big concern. That's despite the relative strength from Apple. Apple broke above 150 yesterday. It was kind of an incredible move. It's sitting at that 150 right now. 150 here is a key level for Apple. And it's just really impressive how well this stock has been holding in. What people need to remember is that there are just a few key companies right now where the market cap is just so large that if these companies are moving higher, even if it seems like everything else is falling apart, and in some ways to me it does seem like everything else is falling apart, the indices are going to hold in. So, your SPYs here still sit at all-time highs. Like, everything looks fine. I do think I am a little bit concerned about a break below yesterday's low, because yesterday was a pretty high volume day. We sold off initially off the open yesterday and then turned around. Yesterday was kind of an interesting, tricky session, right? We gapped down, sold off, held support, traded higher. Right now, as we're talking, the market's getting killed, though. We are breaking below yesterday's low. Qs are coming into yesterday's low. Qs also did a really kind of crazy down move, put in this high volume hammer on at the low of the day, and then V-bottomed to get all the way back to new highs of the day. I mean, just an absolutely incredible move. So, big tech is definitely still in play. The TLT here is a big thing that we're constantly watching. 150 is a big psychological level, so it's not surprising to me that the TLT traded up to and then perfectly held 150, like literally to the penny. So the up move here in the TLT means interest rates go down. So when the TLT is moving higher, it means that the Qs, everything else held equal, should also be heading higher. Right? The NASDAQ is going to be performing best when interest rates are going down. Interest rates are going down and the TLT is moving up. So, not surprised at all. My team and I, the last couple of mornings, we've really been looking for relative strength from the NASDAQ. So, not surprised at all to see that on Friday, and then, continuation of that relative strength into yesterday. The concern that I noted a while ago now on August 6th here, was the TLT had this huge gap down that day on news. I can't remember if it was the unemployment report or the CPI. I think it was the unemployment report. But we had a huge gap down here on August 6th. And we broke this descending channel. So interest rates going down should mean really good strength coming into the IWM, into small caps, mid caps. Interest rates are moving higher. So that breeds that reflation trade. So you should be seeing materials performing well, energy names performing well, financials performing well, and broadly the IWM performing well. And we did get decent bounces here. XLF, financials, very strong because of that. XLE, a little bit more of a struggle in the energy space. Obviously, that's being influenced by other factors that are going on right now with OPEC and now also with what's happening with the tragedy in Afghanistan. So not surprised to see the weakness there from the XLE, but the concern to me was the IWM. So that date I'm talking about is August 6th. That's this day right here. That's a Friday. This should have been a much bigger upside day for the Russell, and it wasn't able to do it, right? You can look at the IWM gap, you can look at the TLT, gapping down on August 6th and then bleeding lower for 4 days. This should coincide with a really big gap up from the IWM and then a bleed higher and really good relative strength coming into the IWM during those days. What happened? Little gap up that day, no intraday continuation, followed by 4 days of consolidation. But at the end of these 4 days of consolidation, and we had that consolidation instead of higher, the TLT now was extended to the downside. So starting Friday last week, after 4 big down days in a row here and this little TLT tail, the team and I started talking about, all right, well, TLT is due for a bounce here. That bounce should breed relative strength in the NASDAQ. So on Friday, and then once again yesterday, we were looking for, and we successfully got, relative strength from the NASDAQ. We spoke about the Apple pattern here. This bull pattern is a beautiful bull pennant that's built out on the daily chart, starting really the beginning of July, building out all the way through, tightening all the way to mid-August here. Big breakout last week to the upside on August 12th. This is continuation of a really bullish pattern in Apple. This is exactly what I expect. Apple to take leadership as the TLT starts bouncing higher and interest rates coming down. And honestly, names like Apple and Microsoft are also starting to be viewed as safety trades. One of the other concerns here under the surface, in addition to the fact that the IWM cannot, should not, or could not catch a bounce when it should have, right? And why that's concerning to me is the IWM, in this modern market at least, tends to represent more of a risk-on thought process for markets. And despite that, there was no bid. So we're not really seeing an appetite for risk in the same way right now for the market. IWM couldn't catch the bid when it was supposed to. We've got things like the XLP, consumer staples, leading. XLU, utilities, really leading the market higher. Look at that XLU chart. 4 or 5 big green days in a row. And seeing money rotating into your Apples and your Microsofts of the world. Amazon's been a little bit out of play, post earnings, but really like Apple and Microsoft are almost starting to be viewed as safety plays. So we're seeing all these safety type plays come in and catching a bid, and this is after I had gotten a little bit excited that maybe some of these speculative names could come back into play. And the thought process there was Bitcoin is starting to break out. Bitcoin was going higher, got above $40,000 again. Palantir had a really good earnings report where it gapped up really big. Triple D had a really good earnings report where it gapped up really big. FSR had that huge Morgan Stanley initiation that caused it to gap up big. CLOV gapped up really big on its earnings report. But look at these charts I just typed up. There was no follow through at all from these speculative names. Like no upside follow through at all. B-Fly was another one. Most of them have now fully retraced that up move that they attempted to have. And you look at this B-Fly, it actually broke support here. Tried to break up, held for a couple of days, tried to create this bullish pattern, complete and utter failure. Triple D gapped up huge on earnings, tried to hold here for a couple of days, tried to build out a bullish pattern, complete failure, filled the gap. FSR gapped up huge, had a rest day, announced a convertible, which is bad for the stock. And yeah, I would expect that convertible offering to make FSR go lower, but the degree of the move here after Morgan Stanley has this huge initiation with a price target of $40, huge upgrade here for FSR, big gap up on it, beautiful rest day. Okay, they come in, they use this as an opportunity to raise more money by issuing convertible debt that should bring the stock down, but a move from 1850 or really 1950 at the high of the upgrade day all the way down to 1350 yesterday, breaking all these lows. This is another one here that's just a complete failure. And those are the ones that reported well. The only one that's still kind of holding up is Palantir. And even Palantir today is very heavy. Then you can look at some of these other ones, like Wish, that actually didn't report great earnings. This thing is destroyed. It's completely out of play. You can look at Jumai, which also did not report great earnings. Just totally bleeding out here, bleeding lower. And you look at a lot of these speculative type stocks, or you look at the Chinese names also. You can look at like Alibaba or Baidu or JD. You just look at a lot of other stocks that are out there in the market right now, and it looks like you're in a bear market. Things are just so beaten up, are so far off their highs. I mean, and I'm not even talking about the highs from when the market had its bubble in January, February. I'm talking about highs from like June. You know, like Palantir, which is one of the better performers here, had a June high of $27.50, and even with this good performance, it's at $24. Let alone some of these others. SoFi, another disaster earnings report recently. This thing here, just in June, was at $24.50. Now it's at $14. Or even look at like an Airbnb. This Airbnb can't seem to get out of its way. Every time it goes after these resistance levels, it just can't capture a bid off that. And that was after, you know, what appeared to be a pretty good earnings report that Airbnb reported. So, you know, the market, if you're looking at certain areas of the market, it almost looks like we're in a bear market, honestly. And I really feel like, obviously, the speculative bubble burst back in January, February. I don't like this price action. And the thing that makes me nervous about this price action, though I'm not necessarily ready to react on it as far as getting short, it's more really trying to make sure that I'm focusing on risk management and position management and things like that. I got out of a couple of longs. I haven't really been doing a lot of adding or new longs or anything like that recently. Is so many of these stocks are so beaten up, and then you type up the S&P and the NASDAQ or the Dow, and they're a hair away from all-time highs. I can't help but wonder, as we see breadth deteriorate into a poor time of the year from a seasonality perspective, and I'm coming in here on a day-to-day basis and I'm really struggling to find long setups, I can't help but keep in the back of my brain, well, some of these stocks that are just so beaten up right now, where are they going to trade if you actually get a market correction? I really don't know what the answer to that would be. Maybe at a certain point you just see money rotate out of the big tech stocks that have held the indices up so well, and maybe it even rotates into some of those stocks, in which case they hold up just fine, or maybe you actually see real broad selling come in. Again, not really seeing a real technical signal here from the big indices to do short selling. And as a matter of fact, I can tell you where the most amount of pain has been. The most amount of pain is from people who are long a lot of those names I just went through that are just so far off their June highs. They're long those stocks and they're trying to short the S&P or the NASDAQ as a hedge. That is where the pain is in a huge way. And I know that that's funds that are doing that right now. So you've got these funds out there that are shorting SPYs and Qs because they're trying to be hedged while buying a lot of these stocks that just can't get out of their own way. And that's kind of a bloodbath of a trade right now. And again, it's with the market at all-time highs. So you almost wonder if at a certain point that pain trade becomes overbearing. And but the thing is, even when it comes to the market trading higher here, we're not seeing any real signals of short-term upside capitulation or anything like that. I do find it concerning if the market starts getting and holding a below yesterday's low. Is kind of point number one, just because you can see here in the SPYs that the volume was so large, and even right now as we're having this conversation, the SPYs are testing yesterday's low area. So if we get a big close below that, it could start leading to a feedback cycle of selling. But it's hard to overread that. You're really just trading back into the space between a rising 8 and 21 EMA, where there's still broad-based equilibrium here happening. So the good book of technical analysis actually says that you want to become and be a buyer here. I'm just concerned about a lot of the things that are under the surface right now that we're paying attention to that are concerning to me, that have me really mainly focused on risk management right now more than generating alpha or putting on new trades. I'm putting on some new day trades every day, but I'm closing out those positions at the end of the day. And generally I'm doing pretty well with those. I do take a couple hits as well on some of those day trades, but for the most part doing pretty well. Made a few bucks day trading Fubo today as an example. But really very cautious on putting on more overnight risk right now. If anything, I'm trying to reduce my exposure. Jared here saying, every time I think that Tesla's going to break out, they sell it. Well, Tesla did break out. Had this breakout here through $700, and then it tried to create a bullish formation above that 700, create another bull pattern here, and then that bull pattern totally failed. Obviously, what caused this failure was news yesterday. Tesla got hit with news about the safety features on self-driving and things like that. That also really hit NIO, NIO is a favorite of mine in the Chinese. First of all, it's a favorite of mine as far as Chinese companies go. It's probably also my favorite as far as electric vehicles go. But there's a big concern right now. I think everyone's aware of Chinese regulation on how that's going to affect these stocks, these tech stocks, and then something like this, where I think there was a fatal crash with NIO that could breed more regulation, also generates further fear. So that really helped bring Tesla and NIO lower, and then Tesla also got hit with a downgrade, I believe, from one of the analysts with a $300 price target. I got to take that with a grain of salt, though. We've been seeing forever as Tesla's moved higher. Look at this chart. Go back to even just, October 2019 in Tesla, and this thing's gone from split adjusted $50 to $900, and you still had those analysts the whole way up saying that the stock is overvalued, overpriced, et cetera, et cetera. And guess what? I actually agree with them. I think Tesla's massively overvalued. But would you rather be short or long for the entirety of this move? You'd rather be long. That's why we take our signals from the market. Tesla here, I think, has become a little bit more of a broken chart at this point. So for me, that doesn't mean Tesla's a short, but it definitely doesn't mean it's a buy either. So for me, Tesla is just not something I'm looking to put my money into right now. So that was a question here from Jared in the YouTube, which I appreciate. And that's pretty much all I got. That's my market update. I'm sorry, I'm not excited today. A little bit nervous about the market, and this is kind of what I've been preaching to my team recently, which is to do a less is more approach. That's been the focus here for the last week or so, is just a less is more approach and really being focused on risk management, remembering that cash is a position. We can always go to cash, reassess, reevaluate, but we are, without a doubt, still in a bull market for the S&P, the NASDAQ, and the Dow, not so much for the Russell. And the good book of technical analysis here says it's still easier money to be long than short, but as we've seen, some of these stocks are massively beaten up, which also goes to breadth weakness. So I guess with that said, let's talk a little bit about T3. Let's go to the charts. We did that already. So, we got a great team here that I'm working with in the Pro Desk virtual trading floor, and there's a number of ways you can be involved in that. Just to give you guys some highlights here, the Pro Desk virtual trading floor is where the majority of the professional proprietary traders at T3 are hanging out as far as the virtual trading floor goes. And what makes it an excellent room is the professionalism and the information and research sharing. That starts early on in the day when my teammates here, led by Patrick, who's over here behind me, or at least he was, we get the news in there every morning for our news analysis. And that news analysis helps us identify stocks that are in play that we could potentially focus on for day trading or a swing trading perspective. Then Pat gets an excellent research note into the virtual trading floor at about 8:30 every day. It's a very big picture as far as understanding market dynamics go, but it's a really important part of my research. And then 9 a.m. comes around, we have a team morning meeting. The morning meeting is about idea and information sharing. I am, similar to what I'm doing here on our, weekly webinar, I am getting in there and I'm giving you guys the information as I see fit. I'm talking about big picture game planning for the market, and then I'm breaking it all the way down into the individual stocks that I'm planning on focusing on for that day and why. Beginning of the day is when I do the majority of my trading. I probably do 85% of my trading in the first 30 minutes of the day, to be totally honest with you guys. And then the rest of the day is really more about position management for me. It doesn't mean I never initiate a new position in the middle of the day. I definitely will, especially if there's a news event or something like that occurring. But I do the majority of my trading in the first half hour of the day. I'm into the virtual trading floor radio, sharing my screen and communicating, usually for that first hour of the trading session. Midday, I go more into position management, but we're still, even though no longer on the radio midday, we're still getting news, information. There's great communication happening in that virtual trading floor all day. Then Patrick, oftentimes, or sometimes me, but oftentimes recently it's been Patrick, will come back into the radio for the afternoon session. We have an afternoon meeting at 10 after 4. The afternoon meeting is really where we focus on education. We review what the market did that day, how it met or did not meet our expectations. I've actually been broadcasting our afternoon meetings onto YouTube recently on a day-to-day basis, so you guys can check that out and follow along with it on real time. So we're doing that for the time being. I'm not sure how long that's going to last, but I just want to get it out there a little bit more on the message of, you know, kind of what we're delivering. So what I'm not going to be doing is broadcasting the morning meeting where we're doing our information sharing live on YouTube. I'm not giving that one away. But the afternoon meeting where we do a lot of our educational stuff and a lot of our review, that's something that anybody Monday through Thursday, I don't do one on Fridays, Monday through Thursday can be involved now following along with my afternoon meeting on YouTube so you can see what it's like. Every afternoon meeting ends in a group Q&A, so that's an opportunity for anyone on the team, regardless of experience level, to ask questions about literally anything that's related to markets. So, you know, that's kind of a day-to-day on what's going on in the pro desk. It's such an awesome resource. It's actually become pivotal for my own trading because I'm working with such a strong team now and we kind of feed off of each other. So there's a number of ways you can get involved with that team. You can get involved by just having a subscription, which is what a lot of people do to a lot of virtual trading floors here. So you can reach out to T3 Live, people over at T3 Live, and you can ask them about getting a subscription to the virtual trading floor. Or you can get the virtual trading floor for free by having an account with us. And what I want to talk about now is the professional accounts, the proprietary trading accounts with T3 Trading Group. T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional traders here. We have 4 physical offices now. We've reduced that a little bit because of COVID. We're probably going to reduce that further, to be honest with you, because even the offices that we have open, even though I'm in one right now, all the people who their sole job function is trading. They are working remotely now with access to the virtual trading floor. We got remote traders all throughout the country. I just traveled from California to back over the course of a year and a half, trading all different locations. It was an incredible experience. T3 is an SEC registered broker-dealer and member of FINRA SIPC. So this means that our professional traders have to be licensed with an SIE, Security Industry Essentials, and Series 57 examinations, and you also have to pass a background check in order to work with us. Once you get through those examinations, through the background check, we can get started with trading. We actually have 4 different trading softwares now. We have Lightspeed, Starting Trader Pro, Wolverine, and Tachyon. We recently onboarded Tachyon. It's kind of an old school platform. It's people who love it. People who aren't used to it tend to not like it, to be totally honest. But it's a solid software. It's really fast, direct market access. Personally, I've been using Lightspeed for over a decade. Big fan of that software as well. So, you know, we get you set up with the trading software, we get you used to it, and then you're trading. We do have other asset classes as well. I'm equity focused, but we've got equity options, futures, options on futures. There's Patrick. Pat, I was just talking to you. We want to give everybody a wave over into the camera.
What's up, YouTube?
You know, if any of these different asset classes interest you, definitely feel free to reach out. I personally focus on equities. I speak to a lot of people who are in retail accounts who are options traders. That makes a lot of sense to me because of the natural leverage that's inherent in options. But for me, as a professional trader, T3 gives me as much capital access as I could ever want. So my thought process has always been, you know, why do I want to trade options which suffered from time decay and are less liquid just for that capital access when I'm already getting as much capital access as I could ever want? All the same, if any of those trading products interest you, reach out and I'll put you in touch with the right person here. New traders should realize that you're going to get access to all the training and development that I was talking about earlier. Daily morning meeting, afternoon meetings, also a training program they're going to have access to, and it's all for free. You know, we want the people that we work with to be as successful as possible, so you're not going to be going it alone. Whether you're experienced or new, you're not going to be going about it alone. You will have to fund the professional account with a capital contribution. And what we typically do on our end is we start by providing buying power or capital access at 20 times that contribution for equity day trading and 8 times that contribution for overnight positions. And then you're compensated through a profit split. So for example, someone who puts $10,000 into an account, we basically start by allocating them $200,000 to work with. And we're working with people of all account sizes. So maybe you have an account with $10,000 in it. Maybe you have an account with $1 million in it with access to $20 million. And right on that point, because of our size, you know, experienced traders is a great place for you to be as well. It's a really strong community. Some of the professional traders that I'm working with on a day-to-day basis have been trading professionally for decades. So there's a lot of value here. And again, our balance sheet is a huge asset as well. If you want to put a couple $1 million into an account because you want access to $40 million, it's really not a problem for us. And you can have access, if you're getting started now, to all of this stuff for free. My virtual trading floor, my training program, Scott Ruther's virtual trading floor, Scott Ruther's all access newsletter, all that stuff, because we are here to work with you and facilitate your success. So I'm going to get back to managing my positions because a little bit nervous about where the SPYs are trading right now as I'm chatting with you guys. This market is potentially on the precipice of breaking down a little bit, and I got to be managing those positions. But here's my email address. Reach out to me if you have any interest on getting involved in any way with the team here. It's a really strong community, and if you're trading, I think it will be a huge value add, regardless of your experience level or trading approach. So again, here's my email address, doldensmith at T3 Trading Group. I am Derrick Oldensmith, and I wish everyone a great rest of this trading week. Check out the afternoon meetings that we're posting on YouTube. Participate in that, ask questions, and I'll see everybody